It is often said if you don't hold it, you don't own it. Why are both physical and digital assets important for your retirement? One thing that can't be denied, inflation is real. With a 2% target as the Fed's ultimate goal, not zero, that means a 2% loss of your wealth year over year. Ultimately, what the Fed chairman sees in the economic tea leaves is not within your control. However, protection of your retirement savings is in your control. If you think you may be falling behind in your financial goals, see the video description to access the free inflation retirement calculator to make sure that you are on track. Also, please share your experience in the comments. To better understand the necessity of real tangible assets for wealth preservation, we will hear from macro analyst and investor Lyn Alden, economist and author Mike Maloney, economist and investor Keith Weiner, CEO of Shapeshift Erik Voorhees, economist, White House advisor and author Jim Rickards.
Gold is money. Dollars are money. Euros are money, Bitcoin is money. They're all forms of money. And if you want to know what gold is worth, just ask anyone who uses money. We all need money. So we have a subjective appraisal of what each kind of money is worth. And in a world where we have very high confidence in central bank money, we're confident in dollars and euros, gold might not be worth very much. But in a world where we start to lose confidence in central bank money, our subjective preference for gold as money would start to go up. Now, people look at the jewelry industry, but I consider jewelry to be wearable wealth. Okay, it's decorative and it's pretty. I understand all that. But if you talk to an Indian bride with, 3 pounds of gold draped around her neck in the form of gold necklaces, she'll tell you that's her wealth. That's her bank account. That's her IRA. That's going to put her kids through college or pay for her house. And so that's how they think about it. And that is the right way to think about it. So
there can be a confusion between the paper banknote that says redeemable for an ounce of gold versus the ounce itself. Think back to a time in the gold standard, call it 1870, whatever, when you had this piece of paper that said, redeemable for the 1 ounce gold coin of the time. So the way this worked is, you deposited gold and you got this piece of paper, and the piece of paper is a receipt that said you can get your gold back, or you can hand the piece of paper to someone else and he can get, it's now his gold, he can get that back. So the paper is a bearer instrument of some sort, but the paper doesn't have any value other than that it's redeemable for the gold. You go to one of those places, you check your coat, and they give you this paper receipt that says coat number 1234 on it. Nobody would confuse the coat check receipt for a coat. Nobody would think that the coat check receipt could keep you warm when you go outside and it's 15 degrees and the wind is blowing. There isn't that confusion. The difference is that's a paper receipt, nothing more than that. But when it comes to money, that distinction has been rubbed out, and deliberately so, with government taking so many actions, including propaganda in public schools. And so that's the sort of crux of the issue is with a piece of gold, you own a physical object in your hand.
Fiat works pretty well, right? It's got pyramids and government buildings printed on it, so you know it's valuable. Also, it is backed by paper. Paper can be burned if you're cold in the winter. There's its intrinsic value. Try that with gold. But a skeptical observer should know that fiat money is an absolute scam, and something altogether inappropriate for an ethical market-based society. As I like to say, you cannot have a free market when the most important good, money itself, is centrally planned and controlled. Fiat money and a market economy are mutually exclusive concepts. Like oil and water, they can certainly be mixed up together when force is applied, but they will naturally separate and dispel one another over time. Indeed, the average lifespan of fiat is less than 50 years. The US dollar only became fiat in 1971.
Gold and silver are honest money. We're not just talking about sound money, we're talking about honest money, because there's no fraud and theft involved. With fiat currencies, there is fraud and theft. Every transaction with gold, the amount of time and effort to dig it up, mine it, refine it, mint it into a coin, and then buy something with it, it's an equal trade. You're trading something for something. With fiat currency, when you borrow currency into existence by saying, here's this house I found, I want to borrow $1 million, and the bank imagines $1 million worth of IOUs into your account, and you pay the seller with those IOUs, it's a trade of nothing for something.
Just a quick interruption to say thank you for supporting our channel. Please like and subscribe if you enjoy this video content. It really does make a difference. Also, a quick mention and shout out to one of our sponsors, Augusta Precious Metals. With over a decade in the industry, Augusta Precious Metals is one of the leading gold investing companies for trust, customer empowerment, and prices. The company provides 401k rollover services to tax-advantaged gold IRAs, as well as a unique gold investing educational webinar and resources for their customers, helping begin beginning and experienced investors protect their retirement wealth with confidence. Whether you are starting a brand new gold IRA or rolling over an existing account, the company will make this process seamless and stress-free. To find out more about Augusta Precious Metals, see the link in the video description to visit Augusta Precious Metals' official site to receive a free gold investing guide. Also, check out our video review of Augusta Precious Metals by clicking the link in the top right. Now, back to the episode.
One of the ways that they could combat inflation is to repeg the dollar to something. We have been an unusual period in history for the past 50 years. Now a lot of people have come to think of, money not being backed by anything as normal. Whereas if you look back over the really long stretch of human history, this was an unusual 50-year period of, the entire world. Every fiat currency in the world is exactly that, fiat. So it's not backed by anything officially. And so that's been the exception rather than the rule to human history. So I do think, people should have an open mind about what currency looks like 10, 20 years from now. I think there's going to be a lot of ways that could play out. But I think in this decade, in order for that to happen, you'd have to see a pretty big inflationary crisis.
Governments never stop printing more currency and adding currency to circulation. Therefore, prices keep on going up, not because the stuff that you're trying to buy is changing. The real estate doesn't change. What has changed is the currency purchases less and less. It's the currency going down, not prices going up.
The policy intervention is kind of relentlessly inflationary. So I do think that we're going to see higher inflation in the 2020s. I do think we're going to see long-term negative real yields. And I do think there's going to be a shift out of, some of those paper assets into some of those scarce assets. And ultimately, where that settles, I think, is an open question. But I think the first step is to make sure you have exposure to some of those scarce assets, things that have kind of intrinsic value, whether they're real estate, whether it's key commodities like copper or uranium or nickel or silver, things like that. Gold for some investors, maybe high quality equities, things like that. That basically is a claim on something of intrinsic value.
Gold, I always recommend 10% slice. And, I talk about gold a lot because it's a form of money, and I do the monetary analysis. And then people always say, Jim, what about silver? What about silver? Like, if gold soars the way I expect, silver's along for the ride. There's not going to be a world of $3,000 gold and $20 silver. That world doesn't exist. If gold's at $3,000, silver's going to be pushing 100. So without giving an exact forecast, silver will be along for the ride. And I do think it's extremely practical because in a world of CBDCs, silver will be a form of spending money.
When you measure things with gold and silver, there is no inflation. Everything just travels inside of a valuation channel, going from overvalued to undervalued to overvalued to undervalued.
Gold holds a proven, time-tested track record as an economic constant that spans millennia. Why is it important to have an economic constant? What is the main question every person planning their retirement or building a business needs to ask themselves? Are we growing wealth or losing wealth? And how do we measure this? Gold is that tool. With a 5,000-year record that has withstood every economic business cycle, stock market booms and busts, global conflicts, and outlasting every faith-based fiat currency, gold is no one's liability. It builds wealth while preserving it. Owning physical gold and precious metals requires responsible sourcing of grades, purity, condition, the best prices, transparency, and most of all, security and storage. Gold IRAs are a tax-deferred means of owning physical gold and ensuring all these investing principles are met. We have reviewed and vetted the best gold IRA companies that meet all these requirements. See the link in the video description to access the free gold investment guides. If you have $100K of retirement savings to protect and want to take advantage of the best gold prices, see the link in the video description to sign up for the free Gold and Silver Web Conference hosted by Augusta Precious Metals. Thank you for watching.